I request everyone to please resettle so that the technical session 4 will be getting started. The speaker is ready, sir. Friends, moving to the technical session 4, I request CA Totapally Vijay Garu to please come to the dais, sir. Before moving into the session, I formally introduce the session speaker. Vijay Totapally is a fellow chartered accountant with over 35 years of experience in audit, financial reporting, governance, and forensic investigations. He has spent more than 17 years with the Big Fours, PwC, EY, and Deloitte, including senior leadership roles at PwC India, where he was involved in strategic oversight of large assurance and outsourcing engagements. Widely regarded as an authority on Ind AS, IFRS, audit quality, internal financial controls, and forensic audits. Sir has led complex assignments for listed companies, multinational corporations, regulators, and law enforcement agencies, including CID. His work consistently focuses on strengthening governance framework, detecting fraud risks, and enhancing the reliability of financial reporting. He has made significant contributions to the profession through his association with the Institute of Chartered Accountants of India, serving as co-opted member of Ind AS IFRS Implementation Committee, Auditing and Assurance Standard Board, and Sustainability Reporting Standards Board. He has also played a key role in peer review and financial reporting review mechanisms and was part of the study group that developed the Audit Quality Maturity Model implementation guidance. Importantly, Mr. Totapally is a member of the drafting group for the guidance note and implementation guide on the financial reporting framework for alternative investment funds, developed jointly with IVCA, contributing to the standardization and strengthening of financial reporting practices in the alternative investment space. He has also served as co-opted member of the Direct Tax Committee of the Federation of Telangana Chamber of Commerce and Industry, actively engaged with industry on direct tax and regulatory matters. A sought-after speaker and trainer, he regularly addresses professionals, regulators, and senior management on topics such as financial reporting, quality audit, quality, ICFR, peer review, GST audits, forensic investigation, and corporate governance. He has conducted specialized training programs for C&AG recruits, GST officials, and CID officers, and is known for translating complex standards into clear, practical insights. He is a lifetime member of the Indian Institute of Corporate Affairs as an independent director and actively engages with industry and professional body to promote ethical governance, audit excellence, and capacity building. With this brief introduction, sir, the stage is yours, sir.
Thank you. Thank you, Chairman. Thank you, everyone. Of course, this is the last session. Probably, I don't want to test your patience, but nevertheless, this is an important session, I feel. But I'll try to finish it in an hour's time, or even less than an hour's time. Are I audible? No. Okay, so I don't want to, bore you or take more time. I'll try to complete it as quickly as possible so that you can happily go home with whatever learning you had for the whole day. The branch is very courteous enough, in organizing this one-day bank audit seminar as part of an annual ritual, which we normally do with all the branches. But I was really amazed by your enthusiastic participation in this session, even though it is, generally I could see in other branches, the last session will be a handful of people, including in my hometown, Hyderabad, where, we used to find 10 or 15 people, but here it's amazing. Thank you for your patience. Okay, so I hope you already has an exposure for bank audits, and I think this is only a refresher for you. I just want to highlight, what can you learn or what can you unlearn through this session. And why are we talking about these red flags? And let me just give you a brief background of what has happened in this space of banking sector in the previous years. Like you know very well about Kingfisher's case. The promoter was Vijay, and the total exposure of that group was around 9,000 crores. And you know what all the banks, it's a consortium which is involved, SBI, PNB, IDBI and Bank of India. And just to understand what went wrong, the major issues which we can sum up are, aggressive expansion. The client, the Kingfisher, wants to expand aggressively, and however, the expansion has led, or the business proposition has yielded high losses, and the loans what has been given to Kingfisher was against the brand, and they have done evergreening. Okay, I'll just take you through in terms of simple terms, what is evergreening. Okay, sorry, I may be speaking some jargons, please bear with me, and then you can ask questions little later in terms of the jargons which I use, because we need to speak the same language, otherwise MBAs are overtaking us when it comes to CAs. We are very number crunching and not outspoken, so we should also learn to use jargons to scare the other professionals. Okay, so as I said, the loans were being given against the brand, which is very, very subjective. What is the lessons for the auditors rather in this case is, we are not able to analyze the unrealistic business projections, and we are not able to question the inadequate collateral which is being given against that loan. And in Kingfisher, there were repeated restructuring that has happened. So the three learnings, the red flags is, if you find when you go to your bank audit, if you find there are frequent renewals of a specific sampled advance which you have taken, then that's a red flag. So from Kingfisher, this is what we can pick up. I'm not going into the circular reference like how we read Income Tax Act and all. I just want to give you a flavor of what needs to be looked into in order to identify how to mitigate our risk as a branch auditor. Right? Let us go into the next known case, which is Nirav Modi's case. The amount of exposure involved in Nirav Modi is around 13,000 crores. And which bank? You all know it's PNB, Punjab National Bank. The fraud was involved is with respect to letter of undertakings. What is this letter of undertaking? Is the Punjab National Bank has issued a letter of undertaking to SWIFT accounts. There is that foreign banker has issued loans from the LOU to the bank, and because the CBS system and the SWIFT system was not been properly reconciled. In simple words, let us take for example a hotel industry. Just giving an example to understand. Hotels, they take credit cards and they take direct cash also. So when they take amounts to credit card, if the credit card statements are not periodically reconciled with the bank statement, then similar kind of Nirav Modi's case will happen, because the exposure, the unreconciled items which appear in the credit card statement, which are not credited to their bank account in case of a hotel, will result into cash loss. Similarly, the foreign currency exposures which are there in the SWIFT system is not being properly considered in CBS, has resulted in the loss. So auditors are not insisting the reconciliation of SWIFT system as well as the CBS. And off-balance sheet exposures. Normally we ignore those items, notes to account, off-balance. These are all very, very important for us to understand and assess the exposures relating to the bank. I don't think this part of the geography where you'll have a lot of off-balance sheet exposures, but nevertheless, we need to be sensible in terms of understanding how the off-balance sheet exposures are to be considered. That is non-fund based limit, you can say, whether they have been properly accounted, disclosed. Right? Next thing is the DFSL case, where the total exposure identified is around 90,000 crores. What was the investigation revealed is the loans were given to shell companies, and there are fake borrowers and round tripping. So we will be talking about diversion of funds, end use of funds, and how the round tripping happens in a little later. So all these frauds, what is the message for us is we need to ask the bank managers some pertinent questions. Like when we go to a new client, even in terms of understanding of business, there we will be trained to ask certain questions to the management before we proceed for audit. In a similar manner, when we are appointed as a bank auditors, we need to ask the branch manager, who are all your top 20 borrowed accounts? Are there any accounts under stress or restructuring? First, gathering information is very important. So you need to ask this question. Have borrowers, any of your borrowers defaulted recently? And has the accounts from NPA to standard has been upgraded? So these are all very important, friends. So these questions have to be asked in order to understand the risk appetite or the red flags what you can identify for those branches. I hope you agree with me. Are there any large exposures in your bank? And when was the last RBI inspection happened? Are there any accounts under forensic audit? So these are all the basic questions which you are supposed to ask. Ask the bank manager before you start the audit, right? And suppose if you are looking at if that branch has a lot of mortgage loans, then I suggest you ask whether they are being registered with CERSA, the Central Registry of Securitization, Asset Reconstruction and Security Interest of India, whether they have been registered there. Our original property documents are led with the bank, because in most of the cases where whatever little experience I have, I've seen, they used to give us the Xerox copy of the property documents or the photocopies of the documents. We rarely able to see the originals. And this question is also a question which we used to ask for Caro, saying, is the property registered in the name of the company? There was one question in Caro, right? The same question you can replicate here. And if they don't have the original documents, that's a red flag.
So that will be there with the MLP or
whatever it is, you need to ask. See, our responsibility. Otherwise, how do you know that that is the original document? That fellow might have given to 10 different places. If that account is a large exposure account, you are supposed to go to whichever location the document exists and see for yourself. I mean, don't take copies. See for yourself and record in the working paper. Later on, I'll tell you what are all the columns and rows you need to maintain in as part of your working paper, whatever you see. I have already said that in the morning, in the afternoon, when you had a small question answer session. I am again reiterating, saying that your documentation should speak the what you have done, not the reams and reams of paper relating to the bank or the client. That will not going to help. See, why regulators, including NFRA, whatever little interactions I have, they say the conclusions and the basis of conclusion what auditor has reached is not been properly documented. And of late, not of late, earlier I used to get a pushback saying we are getting a very small amount from the client. How can you expect us to record all these details in our file? See, if as per the Sarbanes-Oxley Act and other regulators, they say if you have not documented your work and the basis of conclusion, you have not done your work. Irrespective, whatever you can. That means you are not able to demonstrate what you have done. See, in my old days of CA, I'm talking way back in 86, 87, when I was doing my articles, we used to have a pre-printed stationery for our firm, where we used to record what we have seen in that stationery. I think in Vijay, I feel Brahma and Company, they used to have the similar kind of stationery. Correct me if I'm wrong, sir.
Yes, sir.
Seniors. Yeah. So that we have forgotten. And now it is more advantage for us. You have Excel, you have Word, where, our article students also little lazy. They will come and say, yeah, we have done it. We think, they have done it. But what is that they have done, and what are the components in the documentation, what they have seen? They will not document. And the habit is, they'll say we want to make a file, and they'll start making it after the audit is over. Which is again, it needs to be discouraged. As and when you see, first, you design a template. That is what Morning was saying, there is a Center for Audit Quality Directorate has issued a utility. Start documenting in that utility. Initially, maybe it may take some time. Once you get used to that kind of documentation, it will be fair and simple. And then we are all like, how we got addicted to tea, coffee is the same thing. Those Westerners came and then gave us free, and every day, we used to give tea at specific stations and all, made us to get used to it, and then we have habituated for that. Similarly, you start writing down or typing in specific Word or Excel documentation, then you will be addicted to documenting. This is my small suggestion. So when it comes to stock statements, loans given against stock and debtors, the questions what you need to ask the branch manager is, when was the last stock audit done? Who has verified stock statements periodically? So these are all very important questions which you need to ask to the manager before you proceed for audit, right?
Sir, for large accounts, say 500 crores, 1,000 crores, at the time of project implementation, highly approved panel chart accountants are deployed
Okay.
to closely monitor the end use. If their reports are made available to us, that will be of help for us.
You ask in your information request which you are going to send to the bank.
To check whether there are any diverse of funds.
Yeah.
Sir, any help you
Yeah,
require?
yeah. Okay. So, let us ask a question. Why advances audit risk is high? Because we all know in the bank's balance sheet, the highest significant or the material financial statement line item is advance. Mostly 60 to 70% of your bank balance sheet is advance, and from the revenue.
Basis for our fees also.
Okay, that's a different thing, sir. I don't buy on fees because we get risk also. If something goes wrong, our membership is at stake. I always look at that like that rather than fees is my secondary aspect. The primary thing is I need to protect my membership number. Yeah. So this is a large exposure account, that's why we need to see these advances. What are all the risks in these advances? There could be evergreening of loans, there could be diversion of funds once the loan is disbursed, there could be siphoning of funds, then incorrect asset classification. If if a non-performing asset is being classified as standard asset, then that's an issue, that's a red flag. Then in addition to that, there could be security documentation could be inadequate. So let us take one example where the declared stock in case of in case of an CC limit or whatever it is 400 crores, whereas the actual stock value is 60 crores. And we as a branch auditors, we rely on stock statement and the banking system, right? In case of a large exposure, what we should have done in addition to looking at the stock statement, we need to look at the warehouse capacity of that particular client, right? We need to also ask for the insurance claims, insurance coverage. So if we ask these kind of additional questions to corroborate with whatever the stock statements which they have submitted for large exposure, at least our risk is mitigated. Ask the questions, document the answers what you get with some kind of a corroborative evidence. Like, you ask a question, what's the warehouse capacity? You may say, okay, 10,000 square feet. You should not say, yeah, 10,000 as per management representation or the manager said. No, management representation is the last resort. What we are supposed to do is just go one day, inspect that particular location, and then compute. Because this is one of the large exposure which we are talking about. So we need to check the explanations given by the management with additional evidences. Then only our risk as an auditors will get mitigated.
CM is believing inspection.
To some extent, yes.
Through the capacity of the godown and the point will roll.
Let us understand what is a red flag account. Anybody from the audience?
Identified by the manager as a red flag.
What is that they have identified? Red flag account means, okay, I don't want to waste your time, is an account where it has a probability of fraud is very high. Potential risk is there that this account could lead to we are not concluding it is a fraudulent account. We are saying that as per the probability, the account may have some kind of a fraud.
Fraud or NPA?
If the NPA is not being disclosed properly, if they still show it as standard, it is a fraud. Okay, what are the common indicators for a red flag? In similar cases, where you get stock statements and projected, I don't call it a provisional financials, projected financial information, sudden increase in turnover, that's a red flag. Frequent restructuring of the account, which we see normally in bank audits, right? Agree? Then abnormal related party transactions. See, most of the frauds are been revolving around these related party transactions. We all know. It's nothing new, I am telling, but it is the known fact.
Red flag account, do we have to recommend to the management or are they only?
No, see, it is not a question of you recommending, it's a trigger point for you.
System identifies.
It's a trigger point for you saying, okay, look, this account is a focal account. You have to be extra careful in your verification. And this account, whether it is been classified correctly or not. This is an indicator for your audit approach. It's not reporting to the management.
No, sir. What I'm asking, red flag account, will there be a separate red flag account as identified by management?
No. That's what I'm saying, sir. I'm saying.
Normal point of view, you are saying.
I'm saying why this is important is it will be a significant account for us to identify. And what is the fallback? Once you identify this account as a red flag or probable NPA, whatever you can call, you need to do additional procedures to get comfort on that account.
Audit in depth.
Yeah, additional procedures. I won't say audit in depth. Additional procedures needs to be put.
Compulsory to verify.
Sir, one question is there any red flag accounts identified by the branch?
RBI has already given what all the conditions.
On direction 24.
Anyway, this presentation will be shared to all of you. It's there with your branch only. So, what is that we need to have a comparison for these kind of accounts? Is obtain financial statements of those clients, those borrowers, then ask for those GST returns, and any other additional evidence that is required specific to that red flag accounts you need to obtain. Okay, so now next is what are all the regulatory framework that is governing these advances? You know, RBI prudential norms, which talks about how the advances needs to be classified. And I think in the morning, my previous faculties or session holders might have told you about IRAC norms. And the important thing is, please read ICA's guidance note. Very comprehensive. And Mr. Gokhale and some time back myself also had contributed little for this guidance note. Then your Banking Regulation Act, and download all the relevant RBI circulars. Since, as per the MEF scores, you may be very sure of, getting a bank audit. So, from now onwards, I suggest, keep the repository of all these things with you at one place and start reading all these stuff. And we all know the loans are being classified as into 4 categories: standard, substandard, doubtful, and loss assets. Any misclassification, what will be the repercussion? It will have an effect on banks' profitability and capital adequacy. Right? Agree, sir? So, how many of you in the bank audits verify the classification of advances? Because I have seen, you will get reams and reams of that, register which they share with you. I don't know what they call, with the classifications and all. We'll just put our digital signature and just sign out without even verifying whether the classification what they do is appropriate or not. How you think the banks delay the NPA? Which are the 4-5 ways how they delay NPAs? Anyone please?
Restructuring.
Yes.
Credits are towards the end.
Okay.
After that, I think,
Yeah, you are right. So it could be on restructuring of the loans. Nearing NPA, they will give a additional advance. Ad hoc limits they sanction. I think we need to be very, very careful when it comes to ad hoc limits being sanctioned. Temporary loans and evergreening. I'll touch about evergreening little later in detail, how they do it. So what is that we need to verify in these cases is overdue status, interest servicing of the borrowers, and asset classification. These are all three main three main things which we need to look as a branch auditor. Agreed, sir? So let us look at now what is our strategy, or rather, if I say strategy, okay, what is our approach in terms of verification of the advances? First, foremost thing is we need to understand the portfolio of the branch which we are going to audit. Then identify the stress accounts. That means in our information request which we give it to bank branch initially as soon as we receive appointment, we need to ask the question, see, sir, what is your portfolio in terms of your advances? Then give us the list of stressed accounts. Then, like what we have said, what Gokhale sir has said in the morning is, in terms of sampling, no random sample. Sample as per the risk criteria. And I don't know how many of you do this, calculate the classification. Everyone will have a complaint, we will be giving only 3 days or 4 days. How do you expect us to recalculate the risk classification? We have to do it. We have no choice. As if the going is not good, the sword will be hanging on our head as by way of disciplinary case or whatsoever. The regulators are going to grill us. Unless we do this, probably the risk appetite, whatever we have high, will have a problem. Then finally we need to identify the red flags in that entire population. How do we do that? First, ask the branch in terms of their portfolio is, like how much MSME accounts are there, what is the exposure of agricultural loans, how much is the exposure with respect to corporate loans, what are all the retail loans that you have, like that you need to ask and get those details. And what you need to identify stress accounts like SMA accounts, restructured loans, large borrowing accounts. The next step is select samples based on exposure. Take the accounts closer to NPA as part of your sample, and accounts which are restructured, that also should form part of your sample. In addition to that, there are other criteria. I am only talking about only those which are very critical, which you should not miss, is what I am saying.
End of second quarter, third quarter, NPA. Last quarter, standard performance.
Yeah, that's what I said. Then you need to recalculate classification, that how many days overdue, interest servicing, security coverage, all these things you need to do a recalculation. Okay? That should be your approach. This is a slide where I've summed up what are all the documents that you need to verify in terms of the advance. in a loan file. One is sanction letter, then the appraisal note. I think my, what's his name, sir? Ravindra has already covered this.
Appraisal note and process note one
Could be one are the same. They call it in different names.
Document register.
So I mean, this is the approach which you need to say. See here, what you need to focus on is the registration of security. In case of a corporate borrower, he should register with ROC. In most of the cases, and you know, Schedule 3, one of the requirement is, I don't know how many of you are aware of, Schedule 3 specifically asks for all the loans whether charge has been created. Even it talks about satisfaction of the charge also. If you look at Schedule 3, Division 1 or Division 2, the additional disclosures for a corporate client is these two. Agreed, sir? You want me to cover this, or it is already been said in the earlier session?
Challenges are covered, sir.
Covered, okay, let's move.
No focus area, we can give more time.
Let us look at in case of a sanction letter, what could be the red flags? How we need to deal by looking at the sanction letter. I don't know, loan sanction beyond the delegation authority, nowadays, the likelihood of this is remote. Because everything is centralized, but still, we need to look at, in a sanction authority, as per the delegation of powers within that branch, you need to identify. No, the sanction letter will say who has sanctioned it. You need to ask the branch manager, give us your branch, with your banks, because in the bank account circular or whatever it is, there they will specify who will have what authority to sanction. So, that is one of the red flag. Then, credit appraisal is another thing. Nowadays even this has been mechanized. There are various softwares that are available in terms of credit appraisal. It's like using AI kind of. Like when you put garbage will come out. But how realistic is that credit appraisal is a matter for us as a technical experts. We need to analyze. Like, I used to see all these McKinsey guys and all, they give very rosy projections without even looking at the reality. And our governments or some other people, if you have a color-coded, beautiful presentation like this, they think, okay, that guy is an expert, so he knows everything. So we, as an expert, we need to be very careful when it comes to credit appraisal. Whether the appraisal has been done, we need to develop that kind of a knowledge in terms of, for large borrowings, whether credit appraisal has been done properly or not. For that, we need to have a clear understanding of that particular business. Then, the due diligence, wherever it is required, it needs to be there. This is what some of the red flags in sanction. Then, of course, inadequate security. This we have seen in lot of bank fraud cases. Some lakes are mortgaged as security in Hyderabad where they are not able to recover. So like that, this is a very common thing. So we need to be very careful in terms of what kind of collateral which has been given against these loans.
In our area also, sir, agricultural lands, they pay pay this
Nala tax.
Nala,
Hmm.
valuation goes up 10 times.
But whether that we need to see whether there is agriculture in and around that particular land, then probably that land cannot be.
Bank panel value gives the valuation based on SRO. Everybody knows.
Max fixed valuations. Aman.
So that's what I said. Procedure what we need to adopt is obtain delegation of powers, match the sanctioning authority's signature, which is again very important. We normally ignore this. Whether, whomsoever signs, we don't know whether that fellow is the same fellow or like, banks collect our resident signature, whereas we don't do that kind of a validation in most of the cases.
So in one branch is scale 5, manager is scale 4. He is of the new opinion, but he can sanction up to scale 5.
Their internal circulars will be there about his eligibility, sir. That's why I said.
Yes, my branch is scale 5 branch.
So there you mentioned compare sanction date with disbursement date. Compare sanction date with disbursement date. So you mean to say if there is a large difference, then
There could be. Your sanctioning date is after the disbursement date also. In some cases, where I have noticed is the sanction date used to be blank. Most of your loan documentation, they will be blank only. They will not enter the full details.
Unfilled or semi-filled.
What manager or empathize with you saying, sir, we have no staff,
No time.
no time. Our time is back. That's all.
Don't mention, we will fill up.
Any questions so far? Next is your end use verification, which is again a very important aspect. I hope this is not covered, I think. Okay. So in all the sanction letters, they will specify what is the purpose of this loan. Like whether it is for raw material purchase, whether it is for machinery acquisition, whether it is for working capital or otherwise, project implementation, whatever. How does fraud occur in this? It could be diversion, mostly diversion. That's why one of the Caro clauses also say whether short-term funds used for long-term, vice versa, and all that stuff. Siphoning, evergreening, and related party. These are all 4 buckets in which fraud. And there have been general classic cases if the loan is being given for a machinery and then given, and the disbursement is being credited to the client bank, borrower's bank account, instead of directly giving to that supplier, and immediately the borrower might have transferred the funds to his related company. So that's why we need to obtain for large borrowings, even look at their bank statement, their loan statement. Don't take copies unless there is an issue which you have identified in that. If you see there is an issue, like it was being withdrawn, cash withdrawal is there in that loan account, immediately take a copy of that and raise the issue. You need to have a complete documentation to back whatever issues you raise, not the generic one. If you have verified that account, you need to write what is the account, when was the sanction date, who has sanctioned, what is the collateral. All that you need to document in your working paper. That means either in an Excel or in a Word file, saying that these are all the loans I have verified, these are all the names of the party, this is the exposure, this is the balance outstanding, and this is the sanction date, this is the security particulars, whatever you have verified. You might have verified, no, by looking at the sanction letter. The same thing you record.
Branch manager has to take letter, sir, for cash.
Hmm?
When do you have funds?
Branch manager has to take the letter from the.
Okay, sir, if he has not taken, we need to identify and then find out. I am saying this is the red flag.
For each trial, he has to necessarily take the letter.
Even if they have taken letter also, it is for us to say that is a red flag.
Suppose in working capital loans,
Mhm.
so they transfer the funds to their accounts, other bank accounts.
Hmm.
So name and everything, nothing is appearing in the statements or anything else. So how can we identify that? It is not-
You'll see you have to see, go and check the vouchers. The bank has, when there will be a voucher. In that it will be clearly mentioned.
Supposed to do net banking or something else.
Even otherwise, you have to go ask and then pick that voucher and check. Otherwise, regulators, when this is the classic case, where I am investigating most of the cases, such kind of things. I used to ask on behalf of CID and other regulators to get the voucher information and nailing those guys. So before they come in, we have to see that. See, each entry in the bank is supported by their own debit voucher and credit voucher, which have supporting. We need to go to that extent if we have a
Some
suspicion.
online transactions are not appearing.
He's asking about client's account.
Client's
Disbursements from the client's payments made by the client from his own account. How do we watch for all of them?
No, sir, the client may have his bank statement with, I am talking about from his bank statement. Suppose 10 crores is being credited as a loan, right? That 10 crores he has transferred to his related party. That will be reflected as a debit. That, if that is not clear, go to the bank and then check the voucher is what I am saying.
It is done through net banking. Through net banking, online, some transactions.
No, sir, even if it is online, I tell you, there are information available at the back end which will be available, accessible to the manager.
Do they prepare a voucher and keep it?
Earlier they used to, but now there is a screen. The manager used to have a screen separately in terms of that particular transaction.
Sir, in your case, that NCR is transferred to same borrower current account.
Hmm.
In that case, it is amount to
That current account may be with this bank,
same with the this bank.
with this bank. So you take that current account.
I think the dues will be different now. It will be only from CC to directly to the payment to whom to make transaction of like that.
Correct, sir. That's a red flag. You need to ask. Then you need to question the manager. Call that particular borrower.
Yes, is the right thing to do, sir?
Yes, yes,
Is the right thing to do.
yes, it is. Are you getting a comfort on that or not?
My doubt is whether the borrower is permitted to do like that. Both are his accounts.
They are not permitted. See,
For
their
example,
intention is.
management intention is to increase advances as well as to increase the like that. In that case, is it?
That is evergreening, a round tripping, whatever language you call. So that needs to be reported. There are questions in your LFR.
Then sanction letter kada ayina. Sanction time is here.
Nick, the point what I am driving is, you have to go little overboard when it comes to your verification of advances. Not in a traditional way. Okay, going is good. I will do only this way. Wherever you have a suspicion, you need to put your extra effort in terms of ascertaining that particular transaction stream. You should, in the normal audit language, use your professional skepticism. That's the language which NFRA uses.
With our background knowledge.
Hmm. So RBI Why RBI is interested in end use is they want to understand whether there is any diversion to the group entities. If you look at all major bank frauds, it will fall under the first category. Funds routed to shell companies, you all know, Calcutta is very famous for shell companies. Loans were used to repay the old loans. Personal expenses were funded. Then circular transactions. Circular transactions is round tripping, ring fencing. You A to B. I mean, your normal GST also you know, no sir, how the invoices happen. This is the age-old style of fraud.
Still valid fraud.
No, still they are getting caught. It is like అదేదో అంటారు చూస్తారా, అరాక్ తాగి చచ్చిపోతున్నారు ఆయన తాగడం మానేట్లేదని, అలాగే ఇది కూడా రౌండ్ ట్రిప్పింగ్ చేస్తున్నారు పట్టుకుంటున్నారు, మళ్ళీ అదే చేస్తున్నారు.
Game of business.
I don't say game of business, greed. Okay, this slide I feel it's very important. I don't want to read this, which will be shared with you in terms of what we need to do against each of the couple of things which I have identified. What is a red flag? What kind of means what is to be verified? How trace the end user funds and all. Jayant, just share this.
Yeah, sure.
This and the next slide is the same. So, what auditors missed is they fail to identify related party links. We are unable to trace the movements. Like, we need to question the immediate outward transaction.
Actually, our transactions are not possible to identify the date for transaction.
That's why, sir, you need to identify which are the significant borrowers. What could be the red flags in that significant account? See, our audit approach is, we have a standard on risk-based audit approach. The same we need to replicate for this audit. Our traditional way of doing audit is little different. Either we say we do 100% verification, that's how we have been trained. Now we need to, in each of your loan portfolio, you need to identify the risky accounts. How do you find? You have RBI inspections, you have concurrent audit reports. There are so many other reports that are available to you. First, you should emphasize on reading all those reports, make a note, and then you will get an idea of what are all the accounts which you consider as red flag accounts. Then your audit approach should revolve around those accounts. Then if something is missed which is been there in the normal account, you can still demonstrate, see, this is my approach, this is what I have done. Beyond that, if something goes wrong, I have done my duty as laid down by the procedures adopted as per ICA. You can come out clean, and all these things you need to document.
In the morning, we got to discuss one thing. Regarding to identify to solve the NPA issue, the partners or some amount transferred to the account. Is it NP or not? Because the funds are not coming from the manufacturer, from the side. The funds given by the partner or some other party. Funds is not to overcome the NP.
It is not from the bank, no? They have borrowed from elsewhere and this amount has come. You need to question whether this is from a legitimate business proceeds or a loan is taken to repay this loan.
He is taken the loan from
That's a red flag. That's a red flag. But anyway, as far as bank is concerned, their exposure is covered if the amount is being paid.
Because it's not an NPA.
That's not an NPA. That should not be an NPA. That's
but red flag.
Yeah.
so. This is again an important slide for you. How we should document the end user verification. Yeah, you asked what the working paper should contain. It should, as I said earlier, I am reiterating, you have to record all those sample accounts which you have verified. What is that you have verified, and what is the observations that you have raised, and what is the explanations you have got, and finally, which we all are not doing, is the conclusion. Whether the explanations given by the manager or the additional evidence you gather, what is your conclusion? Whether it is okay or not okay, that we need to document. This particular thing can stand as an evidence in the court of law in case of any regulatory grilling happens, which will save us. See, like what I have given example here is verify the disbursement of 2 crores under term loan, whatever, funds are transferred to X. No immediate transfer to related parties. That's your conclusion. So that means you have seen, you have given your conclusion. Clear? Yeah, again I am reiterating the point is, we are not a forensic auditors, but we must apply professional skepticism, perform reasonable tracing of transaction, escalate the suspicion, document what is the procedures that we have performed. This is missing. That is why we have been subjects to the regulators. So end-use verification, as I said, is not a formality. It is a primary defense against diversion, evergreening, and large-scale credit fraud. That's why even in CARO of our normal audit also, the MCA has casted a responsibility on us in case of corporate audits to talk about this end-use verification. Okay, let us understand. How many of you are aware of what is evergreening? Yes, sir.
Sanction fresh loans to repay the existing loans.
Yeah. So why it will be done?
Hiding it.
Postpone.
Top up loans.
Right. So I need not spend.
Technical language, a top up loan, known widely.
Okay.
This is something new for us.
Not, see, it can also happen like, inter-branch routing also. Like, I'll rate it in the other way. Like, you have seen this MedPlace, Apollo and all, when you go for physical verification of stock. If you don't find a stock, that fellow says, sir, wait, sir, I'm getting from some godown. Like that, branch funds the other branch for their, I mean, they have their own understanding among each other. Okay, so related party layering. And these are all some fancy words which I've used to just keep you awake rather boring. So temporary accommodation before the hearing, we have spoken earlier also.
Achieve the targets.
Yes. So why it is risky? It conceals the real stress, it misstates the asset classification, it delays the recognition of loss, it also inflates bank's profitability. Bank balance sheet will be materially misstated. May amounts to regulatory violation. So all these red flags we have discussed.
So ultimately we are harmful to business, not giving sufficient freedom to expand the economy multilaterally.
No, economy will not expand by camouflaging the real state of affairs.
We should expand that.
Yeah, which is here in this case it is not so, no, it's only a book entry. So what is the lesson for us is we need to review the year-end sanctions. We need to trace the end use of fresh loans. Fund trail is very important. And sudden regularization of loans we need to question. Okay, so how we can detect?
Top-up loans.
Contrary report is silent about these cases, and we rely on the concurrent.
We have, see, sir, there are multiple inspections that will happen. One is RBI, concurrent audit, and we should also do our own verification in addition to that. Our responsibility is relying the work of other auditors plus our own verification if you feel there is a suspicion. Because if you, most of the branches operate in a pattern. You can even go back to a year or 2 years and then see. And don't ask me saying that do we have so much of time. You need to. In spite of these, if somebody puts pressure, you need to put your foot down, saying that your membership is at stake, not them. So it's a cosmetic cure for stress loan.
Obviously.
That's what you said earlier.
You widely know the top-up loan.
Sir, can you go to the previous slide?
With the business strategy.
Sir, you mentioned that do not write everything. Instead write fresh credit facility was sanctioned year adjusted against existing overdue exposure. How do we know that adjusted against existing overdue exposure?
Obviously, no.
Then we can directly mention evergreen observed.
No. See, you cannot call a person stupid. You need to, give him a good color. We are auditors.
Spend money through banking.
No, you cannot call spade a spade. No, there is a diplomatic way of telling. I mean, otherwise people will not like you. Okay, on the lighter side, we should not use these kind of words in the audit reports. Our language is little different. That's why I said, write this way.
Marketing language.
Not marketing language, it is language suited for reporting. If we are not MBAs, sir, like, we use that kind of language.
We are MBAs, sir. We are guides to the MBAs.
No, we are not. We are nowhere near them, in terms of how they speak and all. Time end, sir. 7:23, 5:23. Okay, I'll just skip these slides. I think this is also, I think, covered in the morning.
The banks will expand money by top-ups and see that they are performing it. The most common thing. When you rate something, they expand money. RBI will expand money.
So I think this slide is also important for you in terms of documentation. What should be in the working paper?
Management representation. Last resort.
No, it's not last resort, sir. It is as per the auditing standard we need to obtain. It should be there in the file. It is.
You have to draft it.
That is because you are knowledgeable. They have to do
They
that.
have to send it. Suppose they don't like it. That's another big problem.
So this is what I've summed up. What we need to do in terms of strengthening the audit process.
Ultimately, let them expand money, expand our audit qualifications.
So where we have missed is, identifying the money to shell companies and manipulation of LPA classification, collateral validation in terms of, we don't even look into whether the valuation report is valid, whether they have to obtain a fresh valuation report or is it old, is it valid? Because generally I think every 3 years they do a valuation for a collateral, right? So most of the cases it will not, it will not happen.
So what banks are saying that it is only for MPA accounts.
That's what they say, but how do you know that that collateral is valid or not? You need to question and insist. So this is another important slide for all of us. So proper documentation and questioning mindset. I think only our family members grip against us, saying that you are adopting the same questioning mindset as an auditor to us, but otherwise we fail to do it with the client or the banks. Okay, that's it.
Your wife, she will get angry.
Thank you.
Thank you, sir.
Gold rises. Money expands. They are obstructing the money expansion.
You want to surrender your membership?
Membership is safe, so long the gold rises. No delinquency, so long gold rises.
Sir, thank you so much, sir, for sharing such valuable knowledge with the members, sir. I now request the chairman of the branch, CA Lakshmi Krishna Jayanti Garu, and senior member of the branch, CA Krishna Arjun Rao Garu, and the senior member of the branch, CA Mushi Sriram Garu, to join for member presentation to the speaker.
Money should expand. Material contracts.
We, on behalf of Vijay branch of SARC of ICI Managing Committee members, thank Auditing and Assurance Standard Board, Chairperson of Auditing and Assurance Standard Board, C.S. Sripriya Kumar Garu, C.A. Ravi Kumar Patwa, Vice Chairman, and Secretary to the committee, C.M. Megha Saxena Garu, for giving us an opportunity to host this one-day seminar on bank audit. And also, I want to thank all the members and today's session speaker, especially all the speakers who shared their knowledge with the members, and our chief guest of the day, C.M. Uppal Subbarao Garu, for gracing the occasion and addressing the members at large. And we also thank all the members of the branch who graciously attended for this today's seminar. Throughout the day, at least 70 members were there. From the morning, we got an attendance of around 120 to 130, and throughout the day there will be as and when I am seeing the crowd, at least 70 people are there. That was a fantastic structure. We always suggest every member to come to the branch and attend to all the programs so that the members at large will get benefited. And one more announcement from our MC desk is that on 28th this month, there will be a program on peer reviews training program. We request all the members to please make sure that we'll be attending for the peer review training program and get benefited. Thank you one and all.